Okay, so let's go ahead and get started. Hello and welcome to the CNO's latest webinar designed to assist staff and local unions in understanding the variety of government support measures resulting from the COVID-19 pandemic. Today, we'll be discussing the end of the Canada Emergency Response Benefit and temporary changes to employment insurance, along with 3 newly announced benefits. My name is Meg Gingrich, and today I'm joined by Matthew O'Reilly and Gio Jacinto from the CNO Research Department. Before we begin, I'd like to say on behalf of all of us here at the CNO that I hope everyone continues to hold up as best they can through these difficult times. Some of you may have been with us back in the spring when we discussed the creation of the Canada Emergency Response Benefit, or the CERB, which was designed to help those who had lost part or all of their employment income as a result of the pandemic. At the end of August, 8.75 million people in Canada had already applied for the CERB. Next slide. From the outset, the CERB was intended to be a short-term measure, originally only to last 16 weeks. In late August, the federal government announced that CERB would be extended until the end of September. Once it ends, it will be replaced by a temporary enhanced employment insurance program that we will refer to as Simplified EI throughout the webinar. 3 new recovery benefits were also announced: the Canada Recovery Benefit, the Recovery Sickness Benefit, and the Canada Recovery Caregiving Benefit. Today, we'll take you through the important changes to EI and the new benefits, and what it all means for those currently receiving CERB or those who may see a reduction of hours or layoff in the future. And I just want to say, if any of you are having trouble viewing the slides, you may want to minimize the video or thumbnail on your screen. And if you have any issues during the webinar, just use the chat function and DJ from IT can help you out. At the end of the formal presentation, we'll answer questions that have come in and then use any remaining time to open the mics to take your questions live. You can use the Q&A feature to ask questions. I'll track anything that comes in, and we'll have time to submit questions as well at the end. Next slide. So to start, I'm just going to give a quick recap of the CERB. Some of this is important regarding the transition to EI, which Gio and Matthew will discuss in greater detail in a moment. So the CERB temporarily replaced all regular EI and sickness benefits and was delivered through 2 streams: either Service Canada, and that's where it typically processes EI claims, and the Canada Revenue Agency. The benefit itself was virtually identical regardless of stream, and was designed to last a total of 28 weeks from March 15th to September 26th. The CERB provided $2,000 every 4 weeks for anyone earning under $1,000 over those 4 weeks. The CERB was intended to cover those who had lost employment as a result of the pandemic, and after some early enhancements, those who had lost a significant portion of income, including the self-employed and those working in the gig economy. The CERB was available to anyone who stopped working due to COVID or was laid off for any reason, anyone who is sick, in quarantine or self-isolation, or who is caring for someone with COVID. It also covered those who had to care for children due to school closures. To receive CERB, you had to be a Canadian resident and meet an income threshold of $5,000 in insurable earnings in the previous 12 months or in 2019, including maternity and parental benefits. It differed from EI in that there was no job search requirement. Instead, it was entirely attestation-based. There is no difference in benefit level depending on the local unemployment rate or based on previous income. The benefit itself is taxable, though it was not taxed at the source. Finally, the CERB did not allow supplemental unemployment benefit plans or subplans, though pension income, scholarships, and provincial transfers were permitted. The steelworkers have highlighted many of the flaws with the existing EI system prior to the pandemic, and it was clear from the beginning of this pandemic that the structure of EI would be inadequate to deal with the crisis. This led to the quick creation of CERB. So now that it's ending, what will EI look like, and what about the newly announced benefits? We're going to go now to Gio to discuss the changes to EI in further detail. Over to you, Gio.
Great, thanks, Meg. So the government is moving to a simplified version of EI, or Employment Insurance Program, on September 27, 2020. The key changes to the new simplified EI are essentially the following. So there's going to be a setting of the national unemployment rate at a uniform 13.1%, a one-time credit of 300 insurable hours for claims on regular or work-sharing benefits, a 480-hour credit for claims for special benefits, so sickness, maternity, parental, compassionate care, or family caregiver, and a benefit floor of $400 per week. The three new temporary measures will be in place for 1 year to facilitate access to the EI program, which combined will effectively set EI eligibility requirements to 120 insurable hours across Canada, with a minimum regular benefit rate of $400 per week for at least 26 weeks. So the table that you see on this slide here is the standard EI variable entrance table. And so normally, the unemployment rate in the region where you live determines how many hours you need to qualify. Normally, this would have been between 420 to about 700 hours. The unemployment rate in the region where you live also determines the number of weeks you qualify for your benefits. Normally, this range from 14 to 45 weeks. And lastly, the unemployment rate also determines the number of best weeks to determine what your weekly benefit rate would be. So normally this range from 14 to 22 weeks. Next slide. Yeah. Under the new simplified and temporary EI, the VER system, or the variable entrance requirement system, is essentially overridden. Since labor market conditions remain uncertain and largely unpredictable across the country, a minimum unemployment rate of 13.1% is being used for all EI economic regions. And this measure is effective starting August 9th, 2020. Individuals in EI regions with a higher unemployment rate will have their benefits calculated using the actual unemployment rate for that region. The effect of this change essentially means that there is, on the one hand, a set uniform eligibility requirement for EI regular benefits at 420 hours of insurable employment. And so this is before any hours credit is applied. When the credit of 300 hours for regular benefits is applied, the minimum hour threshold is 120 hours. With regards to the credits, it's important to keep in mind that this is a one-time deal, so you only get to use it once, and it's in place for only 1 year. And for claimants who are looking to transition early from CERB to EI special benefits, so again, maternity, parental, compassionate care, family caregiver, or work sharing benefits, but you couldn't establish your EI claim due to insufficient hours, this is actually retroactive to March 15th, 2020. In addition to the measures to facilitate access to the EI program, new EI claimants as of September 27, 2020 will receive a minimum benefit rate of $400 per week or $240 per week for extended parental benefits. If this is higher than their benefits would otherwise be. Normally, EI claimants receive a benefit rate of 55% of their average weekly earnings up to the maximum benefit rate of $573 per week in 2020. This benefit will be provided for a minimum entitlement of 26 weeks of EI regular benefits and set 14 as a number of best weeks of earnings in the calculation of the weekly benefit rate. The EI premium rate for employees for 2020 is $1.58 per $100 of insurable earnings, while the rate for employers is $2.21 per $100 in insurable earnings. I just wanted to flag that the eligibility requirements for the new simplified EI, simplified and temporary EI rather, remain the same. So I won't go into detail here, but I just want to flag that and note that. Next slide. Finally, I think it would be useful to run through a quick example to see how the new simplified EI compares with the normal program. So in this example, we have a person who works in a region with a 9.3% unemployment rate, has 700 insurable hours, and whose regular weekly income is $673. So under the normal EI rules, this person would have been entitled to $370.50 for 22 weeks. Under the simplified EI, this person, after using the 13.1% national unemployment rate, in addition to the 300 hours credit, would be entitled for the minimum EI weekly payment of $400 for 34 weeks. And finally, some details of the simplified EI program. EI benefits are taxable, and federal, provincial, or territorial taxes will be deducted from payments. Subplans are permitted. You can still work while on claim. The majority of Canadians who received CERB through Service Canada and who have continued to report a need for financial assistance will be automatically transitioned to EI regular benefits once their 28 weeks of CERB has been paid. Canadians who are EI eligible and who received CERB through the CRA who continue to require financial assistance once their 28 weeks of CERB has been exhausted will need to apply for EI benefits from Service Canada. And applicants will be able to apply through the usual EI online application process, and applicants will need to submit biweekly reports to show eligibility in order to continue getting paid. And I'll send it back to you, Meg.
Okay, thank you. So now we'll go over to Matthew to take you through the newly announced benefits. Over to you, Matthew.
All right, thanks. I'm going to talk about the 3 new recovery benefits that are being introduced. And I want to note that while these benefits have been announced, they still need legislation in the House of Commons. So the Liberals have stated that they think they have enough time between when Parliament resumes on September 23rd and when the CERB expires on September 27th to get these up and running. But it will be a tight deadline and the government will need support from another party. So it should be an interesting couple of weeks in Ottawa. And the 3 benefits that were announced are the Canada Recovery Benefit, which is an EI-like benefit for workers who are ineligible for employment insurance. The Canada Recovery Sickness Benefit for workers who are sick or must self-isolate due to COVID-19. The Canada Recovery Caregiving Benefit for caregivers of children or family members and dependents with a disability. So I'll just get into each one of them in a bit more detail. The first benefit is the Canada Recovery Benefit. As I said, this is an EI-like benefit for people who are not eligible for EI. So that includes self-employed workers and gig economy workers. The benefit is a flat $400 a week for up to 26 weeks. So this is the same amount as the new benefit floor on the simplified EI program. To be eligible, you must have stopped working due to COVID-19 or have your employment income reduced due to COVID-19. Though at this point, how much of a reduction is required is unclear because the legislation has not been introduced yet. And claimants must have earned $5,000 in 2019 or 2020. This is a similar entry requirement to the CERB, and it's based on income, not insurable hours. Like EI, there is an obligation to be available and looking for work. However, the application process will be attestation-based, so workers will just have to attest online that they are available and looking for work. And an important distinction between this recovery benefit and the CERB is the ability to work while receiving the benefit. Claimants who find employment while in receipt of the benefit will have to repay 50 cents for every dollar of their annual income over $38,000. So no more just $1,000 permitted income. You can earn as much as you want, but once you're over $38,000, you'll have to repay 50 cents for every dollar you get from this benefit. Now that's actually more generous than the working while on claim provision under employment insurance. If you'll recall, under employment insurance, you can keep 50 cents of every dollar, but starting at the first dollar. So under the Canada Recovery Benefit, you have to repay 50 cents for every dollar, but only over $38,000. The second new recovery benefit is the Canada Recovery Sickness Benefit. So as the name implies, this is for workers who are sick or need to self-isolate because of COVID. You may recall the federal government entered into a safe restart agreement with the provinces, and that one of the conditions of that agreement was the provision of 10 paid sick days. So I guess the federal government interpreted that as government paid sick leave, but this is how they are going about providing for the sick leave. So the benefit amount will be $500 a week. This is only available for up to 2 weeks in a year. So that lines up with the 14-day quarantine period. The benefit is available to self-employed and employed workers. And I've been told that a worker who is eligible for EI sickness benefits can choose either benefit, or take the recovery sickness benefit first and then fall onto EI sickness benefit if they still need it. However, a worker cannot claim both the recovery sickness benefit and EI sickness benefit at the same time. Neither can a worker combine the recovery sickness benefit and employer sick leave. Though I can't say for certain if that means that workers have to exhaust their employer sick leave before claiming the recovery sickness benefit. Now that's a rule for EI, but if it applies to this recovery sickness benefit is unclear at the moment. As for the eligibility criteria of the sickness benefit, workers must miss at least 60% of their scheduled work, and they must have earned at least $5,000 in 2019 or 2020. No medical certificate or doctor's note will be required as it is attestation-based, and it will be administered by the CRA and be available as of September 27th. Finally, the third benefit is the Canada Recovery Caregiven Benefit. This is for workers who cannot work because their normal caregiving arrangements are untenable due to COVID. The benefit is $500 a week, but it's per household for up to 26 weeks. Per household, not per individual. It's only available if you have to miss work because schools, daycares, or day programs are closed. If schools or daycares are open, but you prefer to keep your child at home, your household is not eligible. So you have to miss work because closures have thrust extra caregiving responsibilities onto you. And again, the threshold of missed work is 60%. A few more details on this caregiving benefit. You must be employed or self-employed immediately prior to applying. So again, it's for someone who misses work, not necessarily paying for caregiving labor. You must earn $5,000 in 2019 or 2020, and it cannot be combined with other benefits. It is administered by the CRA and available effective September 27th. And to finish, I just want to reiterate that these three new benefits require legislation and that legislation has not been introduced yet. So those are the three new recovery benefits. Thanks.
Okay, thank you so much. So now we're going to go over to the question portion of the webinar. We have about 20 or 25 minutes where we can take questions from the audience. So if anybody does have a question, I'll just remind you, you can use the Q&A feature at the bottom, and you can send in a question that way. And then after we've answered a few questions, if there's anybody who would like to ask a live question, you can just raise your hand and you can indicate and we'll open your mics for that. So I'll just, to get it started, ask Matthew a question. So I just want to get some insight and feedback on the your commentary, your thoughts on all of this, what may or may not change considering that the legislation hasn't actually been passed, if you think any of this will become permanent and so on. So Matthew, over to you.
Yeah, as far as what might change, so the EI changes have happened, that they didn't need legislation. The recovery benefits do need legislation, so they very well could be changed. We'll see what the government introduces next week, and if they can get something passed. One thing that is disappointing about the EI changes is that they're temporary in measure, right? And they're done in a way that preserves the structure of the program. So the steelworkers and the CLC and other groups have, lobbied to decrease the hours you need to be eligible or extend the benefit period. These changes recognize that the program is inadequate now, but also preserves the structure of the program. So we're hoping we can see other changes that are more permanent. And as far as the recovery benefits, I do think they're necessary given this emergency situation that we're in, but it is concerning that employers that, or people that employ contractors or gig economy workers aren't paying into the employment insurance program, but they're basically getting access to a program that provides the same benefit, or at least the same minimum benefit at $400 a week. So we would love to see gig economy workers, contractors, and especially the employers that hire them pay into the system and make it work like EI.
Okay, thanks for that. I am going to go over now to Gio with a question. So this one relates to how does being on CERB affect maternity and parental leaves? So the question is, if a person goes off on CERB and then later on applies for maternity or parental or adoption leave, does it reduce the amount of EI benefits for them, or possibly leave them with no paid benefit if they've used up all of their weeks of eligibility for EI on CERB? Gio.
Yeah, from my understanding, I don't think it doesn't. The time that you've been on CERB will not be discounted on an EI claim unless you had access to EI regular benefits or anything. So I think the ESDC and the government has sort of made it pretty clear that the CERB program was meant for COVID-related job losses, and that any future EI claims wouldn't be sort of discounted from someone being on CERB. So in terms of maternity and parental leave, if anyone were to apply, the time that they've been on CERB, from my understanding, would not be further discounted.
Okay, thanks for that. Matthew, I'm going to go back to you. So just in terms of some of the other benefits that have been announced throughout this whole thing and other programs, regarding the wage subsidy, is that still in place or is that ending too? If it is still in place, how might all of this affect eligibility or payment from the simplified EI?
Yeah, so the wage subsidy is still in place, I believe, until the end of November. And basically, you cannot be on the wage subsidy and on EI or the CERB at the same time. So, you're going to have to choose one program, or basically, if you're on the wage subsidy, you can be at home being paid through your employer, but you're technically employed. You're still tied to your employer. You're not laid off. So you cannot be on EI at the same time. And your employer includes your name in a report to the government when they get their funds. So you'll be probably caught.
Okay, thanks. Okay, so I see we have a question here that's coming through the chat. And so the question is, and I'll start it off with Gio, and then Matthew, of course, you can add anything you'd like to as well. So the question is regarding EI eligibility, and it's my total work hours for 2019 was 374 hours. And then I've worked in 2020 for 2 months before we had to stay home due to COVID-19. But they did not give me a record of employment. Otherwise, I would have worked over 400 hours. Gio, I'm wondering if you have a response to how that might affect EI eligibility.
Yeah, so the 1 hour credit essentially can be applied from a year back from September 27th, 2020, from when it's introduced. So September 2019, essentially. So if you have a minimum of 120 hours in between those two dates, the end of 2019 and the beginning of 2020, you would potentially qualify. If you had 120 hours, in addition to the 300-hour credit that you get, you would be able to apply for EI. So I'm just looking at the question again, just to make sure I'm. Yeah. So if you did get a record of employment, you should probably ask your employer for the record of employment, and they are obligated to give that to you. So that would be definitely something to pursue, because that's a key part of making your claim, just in case you don't have the amount of hours from the end of, say, September 2019 to January 1st, 2020. Yeah. Matthew, if you want to add anything to
that. Just good point about the record of employment. That was not required during the CERB, but for EI, I understand that it will be. So speak with your local if your employer hasn't done what they should have done.
Yeah, good advice. Let us know if you have any follow-ups on that. So just one more question regarding job sharing, which also those changes were announced along with some of the, at the beginning of the pandemic. Matthew, are those changed rules around job sharing still in place, and do you know how long they'll last?
Yeah, so the job sharing changes that were announced in the spring are actually in effect for the whole year until next spring, so March 2021. So it was basically expanding access to the program and extending how long you could be on the program. So yep, they're still in place until next year.
Okay, great. So can you just put up the next slide? We have a few more minutes if anyone wants to ask any more questions. And if anyone is interested in asking a live question, you can always raise your hand and we can open the mics for you. I don't see any so far. It's sort of last chance if you want to do it now. If you would like any more information from us, you can always go to usw.ca/COVID-19. You can send questions directly to our department at research@usw.ca. And we can always send out the slides. And there's also a handout that we've put together with some of this information. And so I do see that someone has raised their hand, Mike Pulak. So DJ, would you be able to unmute Mike, and we'll get a live question in from him. Okay, your mic should be open now, Mike.
Okay, I'm good. So I have a group here in Winnipeg that originally, when the legislation was all changing around work share and it had been extended and the qualification periods, where they had a 1-week layoff and then announced work share. They were kind of pulled the trigger prematurely before the work share was signed off on. And we had a number of individuals, about 6 of them out of the group, that applied for EI CERB benefits and were put on the CERB program, but because they worked immediately after that, they disqualified themselves from any payment because they met the $1,000 threshold. But the work share program is in place, yet they're not receiving any benefits because EEI has locked them in as CERB recipients instead of work share program people, even though they're on the list. Has anybody dealing with that had this issue, or has it been resolved because they can't seem to unqualify them from the CERB list and put them on the work share list? Anybody that was only applied for work share has been approved and getting payments, but for some reason there's a glitch in the system where people that applied for CERB prior to work share are stuck on CERB.
Yeah, that
Weird,
does seem to be a glitch with on EI's end. But are they getting CERB every month, or was just that first time and now they're not receiving anything?
Yeah, so because they were off for a week, the employer told them to apply for EI. They applied for CERB, did not get anything because immediately because the 14-day qualification period, they were back to work, so they didn't qualify for any payments, and they continued to earn income every month because they're on work share. And so they're kind of stuck where they're not getting their work share EI because
so their employment insurance is misclassifying them as unemployed or like CERB eligible when they should be on the work-share program.
You haven't heard of that?
Sorry? No, I've not heard of a situation like this. That does seem to be a technical thing on employment insurance's end. Have they tried following directly with employment insurance? And if not, would it be helpful if we got some contact information?
We actually got some leverage from the NDP, wrote a scathing letter criticizing them for their incompetence around the programs and that we had individuals not receiving any benefits. The current patch that they basically told our members was reapply under work-share as if you were never, resubmit your whole hours and see if it'll go through. So I haven't heard back yet this week if anybody's got paid, but these are people that haven't been paid any EI since March. You're on work-share.
Yeah, that's something, I mean, we can try to find out more on that. And then if there's any other follow-up questions that you or anyone else has after, you can just get in touch with us. Because we've had a bunch of other, staff reps and others get in touch with us with various sort of detailed questions on specific things that have happened. And there seem to be a bunch of glitches and things like that. In terms of this, though, I just want to see if there's anyone else who's interested in asking a question. You can raise your hands. I don't see any more that have come in through either the Q&A or the chat. So if there aren't any more, then we'll wrap up in a second. Again, I'll just remind you that you can always get in touch with us with the follow-ups. Or for more information, go to usw.ca/COVID-19. And if I don't see anything else coming in, which I don't, I'm just going to, we'll end things in a minute here. And so I just want to say thank you to Matthew and to Gio, as well as to DJ from IT, Adrian and others who all helped on putting this together. Please don't hesitate to get in touch with us with more questions. And I hope this was helpful. And with that, I will end the webinar. Thank you very much to everyone who joined today.